Hey guys, welcome back to the channel. I'm Steve and we talk all things investing and stock market related. Today I want to go over six problems that beginning stock market investors go through, and which leads them to either tremendous losses or no gains in the stock market, or just being fed up with it altogether. The first problem I'd like to talk about is having no plan. Now, a lot of people see other people investing in stocks and they hear the good, or they're watching TV shows like MSNBC, and they're like, oh man, if I had this, or if I had some money to invest, I would buy this. Or they're hearing other people that they're around that do invest, and they might be seeing the fruits of their labor of being patient and getting gains in the stock market and building off of dividends or what have you, or option trading or whatever, and not even knowing what it is, but they know they want to be a part of it. There's nothing wrong with that. But the first thing is, like I said, having no plan. You sign up for a money market account or your investment account, what have you. Before you even do that, you should, you can set your account up and you can fund your account. But it's good to do some type of research of what type of investor you are, what type of investor you want to be. Do you want to invest in growth stocks? Do you want to invest in value stocks, dividend stocks, blue chip stocks? Do you want to invest in technology? All of these factors have an outcome in what type of performance you'll have in the stock market. Learn certain terms. Find out what PE ratio is. Find out what the company does before you buy it. So many people, I've seen it a lot of times. Something could be hot right now. Like say, like a few months ago when GameStop and AMC theaters were taking off. And everybody was like, oh man. And then people were like, oh man, I got to go get me some of that. You don't even know what it is. And they're jumping into it. And then it had that big climb and then it fell off. And I talk about that all the time. You don't want to get caught in the fear, missing out, and all of that stuff. A lot of stuff that's trendy is not good for you. But that's number one. Have a plan when you start to invest. Know what stocks you want, and you'll avoid a lot of trouble in the long run and a lot of frustration. Number two, we'll say not doing your research. What I just said. You'll hear a lot of people jump on stocks and don't know nothing about them, but they just like, hey, I got it though. So when it goes up or goes down, I'm going to be in it. A lot of times that don't work. So when all hell breaks loose in the stock market and you're not even paying attention to what's going on, because, you're here to set it and forget it. But, that variable goes with a lot of different stocks, and it comes down to when you do your research, then you follow that rule. You can be caught out there. So, doing your research, like if somebody says, hey man, because a lot of people deal with people and they get caught up in stock tips, especially beginners, because they don't know anything, and they hear something, they go and run onto it. I'll give you me for an example. Soon as I got my stock, I started telling people I was stock market investing. Hey man, you need to go get Tesla. Hey, you need to go get this. So I would sell out of a position, not even had a position for 2 days. I'd sell out of the position and then go buy something else. But this is the time when they were charging you $1 per trade. So as I'm making 20 and 30 trades in a month, that's $20 and $30 I lost. Because I didn't do my research. I didn't even know why the money was going down. All I saw was numbers green one day, red the next, and then green, and taking off. And I'm thinking I'm doing something. So it's like you just do your research and make sure, you don't have nobody just whispering in your ear per se and telling you, hey, you need to go get this, you need to go get that. This stock is hot, you're going to miss out, you're stupid if you don't join it. No, it doesn't. It has everything to do with what your plan is. Have a plan. Number three, like I said, following trends without researching. We just spoke about that. Never jump on anything because it's hot. It can run for a year. But unless you understand fundamentals of the business, the place it has in the economy, how the economy plays on it, the longevity of it, where they're making money, if they're turning a profit, or is it just a hot stock? You got to learn all this, because a seasoned investor, if he's really on his stuff, or her stuff can look at something and be like, okay, I don't want no parts of that. You know, investors like Peter Lynch, Warren Buffett, they stay away from things. Stuff that I would be like, oh man, I would jump on that because I see it. If they don't understand it, they don't mess with it. You know, that comes to the third one. You know, I mean, to the fourth one. Only invest in something you know about. Don't invest in something. So, hey man, like I was talking with a client of mine who's a doctor, and he said, hey man, it's a chemical place that's a stock, and they're doing pretty good. I was at the golf course and my buddy brought it up. It's selling at 100. No. He said $1.50 a share. $1.50 a share. So I'm like, you deal with penny stocks? Well, yeah. He didn't even know what a penny stock was. And this is a doctor, not saying, you know, doctors should know about, you know, because anybody can just invest blindly. But he was like, yeah, I just bought like 20,000 shares. It's set to take off in the next 3 years. And I was like, this was like 4 years ago. I never heard back from it. But I was like, man, you know, that's blind investing. You never invest with a blindfold. You might as well blindfold yourself and throw darts at balloons with tickets in them and then read the ticket and invest in that. It's a dangerous game. Always have to know how of what you want to do and be one step ahead before you make that move and you push the sell button. Or you push the buy button, rather. All of those ones I just named, having a plan, not having a plan, not doing research, following trends, listening to what other people tell you to invest in, it'll all lead to this: panic selling. Now, panic selling is you get fed up with the stock is not coming up. You had the stock for 2-3 months, because a lot of people are impatient. You know, this is, it's not like a casino or a gamble. You know, it's only a gamble when you don't have discipline, patience, and you don't do research. That's all investing is, whether it's stocks or anything else. Having the discipline to follow through with it. You do the research before you even pull the trigger on any type of deal. And then you're patient to see it come to fruition. That's all the stock market is. It's easy. But most of us, you know, we're impatient, or we don't understand what we brought and we don't see the vision. We might hear the vision. Oh, hold it for 3 years and it'll 5x. But after you got about 6 months and it's going down, what are you going to do? Your mind plays tricks on you. You start to panic. You don't look at the big picture. You just look at the now. You know, it depends on what the economy and if the stock is hot or not, or if people are into it. And that has nothing to do with the business, how the business is ran, whatever. So what, they missed the earnings one time. They missed the earnings one time, and all of a sudden, oh, this company is a bad company. That has nothing to do with it. You know, I went through that with AT&T. When COVID came, AT&T started falling. I started getting scared. I'm like, what is this? And then I'm looking around. I'm like, this truck's running all up and down every day. My phone is still on. There's nothing wrong with the company. And then I had to do research and just find out that the stock price is you can distinguish it from the business. Those two don't run together. You know, stocks go up and down every day. People are selling stocks and people are buying. You know, but it just comes down to 3 things: research, discipline, and patience. Number 5, investing your money. You know, investing money that you need now. If you don't have the money to invest, don't do it. Like, I started investing, I just wanted to get my toes wet. I started investing with $100. And then I turned $100 into $500. Once I started getting a bunch of shares, I could start to see how the stock market moved. Now I learned on the fly. I'm self-taught. And I'm like, wow, okay. And I started watching little YouTube channels, not YouTubers, but like a YouTube, like, you know, Nightly Business Report. When that used to come out on CNBC, they discontinued it. But if you go on YouTube, they have old episodes of Nightly Business Report, which was basically the news on stocks, what the stocks did during the day. And then I would learn these terms, and then I would pick up these terms, and then I would figure out, okay, this means that, and that means this. Okay, if I have 10 shares of of a stock, I'll make this amount of money from the 10 shares, and this is how the stock price moves up and down, how it fluctuates, what I make during the day, and after hours, if it goes up some more, I'll make this. And it was just a lot of different things. So I understood after a while. I looked and I was like, okay, well, I'm not understanding what this stock does, and I don't want to invest my time and money into something and wind up with 10, 12, 15, 30 stocks, and I only know what 2 of them do. You know, it's not good. And that's a big mistake everybody does. We're not, you know, all of us make mistakes, but majority of people, they might go and invest money, and then as soon as you get the stock and the stock not doing what you want it to do, because you don't understand that the stock going down is good if it's a lifelong investment, because now it's on sale and you can buy more shares. That's how the rich get richer, per se. You want the stock to go down. You don't want the stock to keep going. Listen, if I go and buy 3M right now for $120 a share, if I go buy 3M for $120 a share and it go up every month, it just goes up continuously for the next 3 years, and I only got 1 share. If I brought in at $120, whatever, $120 a share, and now it's all the way up to $360 a share, I lost money. You know, that's why you do your dollar cost averaging, where you put a little bit of money in every month and you buy shares whether they're going up and down, so you can escape that gap. But going back to it, always invest in something you have knowledge of. If you don't know what Apple does, don't buy Apple. If you don't know how Tesla makes money, or a car stock makes money, don't invest in it. The safest way, in my opinion, to when you first start off, is put your money in an ETF, an electronically traded fund, which is a basket of stocks where you can see the margin of error and it doesn't kill your money. And you do see gains and you see losses, but they're more controlled because you have multiple stocks instead of just one stock taking a hit. Going back to the last one I'd like to say today, and that's not asking for help. Give an example with me. I joined Ameritrade, right? TD Ameritrade, once I joined, they called me like within an hour, right? I did it in the morning, they called me within an hour. Hey, Steve, congratulations on something. Have you thought about our Thinkorswim program? I'm on the phone with them. I'm talking like I know everything. I'm like, yeah, I heard about it. I don't even know what it is. And I'm like, yeah, I heard about it. And this and that. And they're like, well, it's free. You know, you can go into it. It seemed like, you know, you can learn something. Even a seasoned investor can learn something. I'm like, no, I'm okay. I could have avoided a lot of money lost. You know, but I wanted to be proud and want to act like I've been here before. There's nothing wrong with asking for help. If your investments are down and you don't know what to do, talk to somebody. You know, there are professionals out here. Or you might know somebody that invests, and you're not going to look stupid. The stupidest thing is when you don't ask questions, and then at the end you look dumb in the face because you should have asked them. But I mean, getting back to, you know, staying on topic, you know, always ask for help. You know, always do your due diligence, like I always say, and always invest wisely. Invest in what you know, because you can get knocked all the way out of this and you can have a hard fall. And it's not worth it, because if you do it right and you figure out the ebbs and flows of how the market is and what you're doing as an investor, because all of us as investors are different. We're all different. You know, my strategy is different than yours. Your strategy is different than hers. Hers from his. You know, everybody wants to get to a certain spot. So taking the stock advice from somebody else, you start to go in their direction, not yours, even though y'all could be talking about the same thing. But anyway, that's it for today on the video. I hope anything I said was educational to you. As always, drop a comment. Tell me what you thought about the video. If I left anything out, or if any experiences you have, share them. We'd like to hear them. As always, smash the like button and subscribe. And I'll see you in the next video.